Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate, to do some teaching. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Well, there's the quarter-point rate cut, and then there's Nvidia. There's Jay Powell, and then there's Jensen Huang. There's endless hand-wringing about inflation and job growth. And then there's a company with an outrageously high 73% gross margin and hundreds of billions of dollars in opportunity. I'm talking about the extreme dichotomy between focusing on a body of wizened economists who are being pushed around by a president who wants to run the central bank and focusing on the freewheeling capitalism of the semiconductor business with some bizarre federal intrusions in the age of artificial intelligence. That dichotomy plays out every day around here, including this one with Dow advanced 124 points, S&P gained 0.48%, NASDAQ jumped 0.94%. And you know why? It's because a huge percentage of the money that's invested in stocks sits in index funds, which have a tight correlation not with the companies themselves, but with the bond market. When interest rates go up, the indices tend to go down. Makes sense. Higher long-term interest rates are typically bad for business. When rates go down, the index funds tend to go up for the same reason, because almost everybody benefits from lower borrowing costs. So the linkage, it's ironclad. Sure, periodically the stock market can break free from the shackles of rates, but not very often. Yet that's the only investment most people say you're capable of owning. But when we're talking individual stocks, which I think you're capable of owning, there are plenty that are independent of anything the Fed might do. There's so much money parked in index funds that sometimes we forget that those indices are made up of individual stocks. The indices certainly weren't created for the stock of Nvidia, though, a company with a $4 trillion market cap that's not at all hostage to interest rates. In fact, it's not even hostage to its own industry, as we saw today, which is why Nvidia could make a $5 billion investment in a one-time semiconductor kingpin today, Intel, and see its own stock rally 3.5% or $150 billion in response. You spend $5 billion and you tack on $150 billion in market cap. Now that's a miracle. This is the kind of gain everybody wants, and it's much easier to get when you don't spend all of your time worrying about the Fed and quarter points and dot plots or putting the hate on the individual stocks, as almost every professional does, because they think that you can't handle. First, let me tell you these incredibly wild circumstances that explain why Intel even needed the cash so that Nvidia could make the profit. At one time, Intel was by far the most important semiconductor company in the world. It owned the PC and server market, but it didn't go into fast chips, the kind that Nvidia makes, the kind that originally for gaming, but ultimately generate artificial intelligence. Not only that, for years, Intel ran circles around advanced micro devices. But when Lisa Su took over at AMD and set her sights on taking Intel's business, she succeeded beyond her wildest dreams. Intel had roughly 85% of the PC market when Su took over 11 years ago. AMD had about 15. Now AMD holds about 40%. And in the huge server market, AMD had only 1 to 2%. Now it has more than 25%. In both cases, AMD is still gaining share, while Intel feels lost at sea, dazed and confused. A few years ago, Intel picked a new CEO, Pat Gelsinger, who vowed to stop losing share in PCs and servers while taking on Nvidia in accelerated computing and artificial intelligence. Oh, man, he spent fortunes, far more than Intel could afford. Although he caught a break when the federal government gave Intel some big handouts from President Biden's CHIPS Act. But it wasn't enough. No, the huge foundry build-out failed to attract enough customers. Gelsinger was ultimately fired. In came Lip-Bu Tan, possibly the greatest semiconductor venture capitalist in history. He left Intel's board of directors under the Gelsinger regime because he wasn't a fan. Once he came in, he had to end the runaway manufacturing train and raise cash in a hurry. And he's proved quite adept at that. First, he got $2 billion from SoftBank, $23 a share. Then he got $8.9 billion from the Trump administration, 433 million shares struck at $20.47. Then last night, he got that $5 billion from Nvidia at $23.28 per share. It was instant gold for Nvidia, as Intel stock immediately zoomed from just under $25 to $30.57 tonight. That's right, $30.57. Now, that was a remarkable move. In return for the money, Intel got a new partner in this PC and server business, where more than $50 billion is up for grabs, and Nvidia really wasn't playing in that sector at all. That makes it a huge win for Nvidia and Jensen Huang, because they got Intel for less than it's worth, and they'll never turn out more personal computer. They need the personal computer exposure, let's put it that way. Meanwhile, Intel says stays in business and can thrive if it executes. And I think it can under Lip-Bhutan. AMD, okay, new competitor, but Lisa Su's used to it. That's why her stock was initially down a lot, but bounced back. You can never count out Su. She's too good. More important, for our purposes, Nvidia, which had seen its stock in the doldrums of late because of its China problems, broke out of that sphere of influence for the moment. I think today's news, where Nvidia can spend a couple of hours worth of profits to make a hugely successful investment, is a terrific reminder there's a lot more to Nvidia than China. And there's still a lot of money to be made in individual stocks, including the biggest one in the world, Nvidia. Sure, the broader market may be hostage to the Fed, but you can't game the Fed. Even the president can't game the Fed, and he's sure trying. But can you game Nvidia? Okay, here's what you can do. Stop the gaming. You can invest in Jensen Huang and his amazing team. Invest. You can let Nvidia, a veritable index of chip companies, make you the kind of money index funds can't ever keep up with. You can own Nvidia and not have to trade it. I wouldn't be so focused on Nvidia today if it weren't for the fact that it's one of a handful of companies that seems very much in charge of its own destiny. When you look at the market, there really aren't that many stocks where you can say, hey, they're not hostage to a quarter-point rate cut. That goes against the conventional wisdom. But when you have a company like Nvidia that's rolling in cash, why would you care about borrowing costs? Now, if it were just Nvidia that could control its own destiny and not worry about borrowing costs, then it would be different. But it's not just Nvidia. We have a company like Meta introducing a new way to take information using eyeglasses augmented by hand gestures, even if the rollout wasn't ideal. We have a company like Apple, which introduces new phones with so many functions we couldn't have imagined a few years ago. We have a company like Alphabet that's introducing self-driving cars all over the place. All right, so today, Microsoft, Amazon, and Tesla were silent. That'll probably change tomorrow. So many people have tried to scare you away from investing in individual stocks for almost 25 years, and yet that's where all the money's being made and has been made. These experts don't even want to admit that the Magnificent Seven exists. They think it's too risky to chase gains in the individual companies. They hated me for coming up with FANG. Yeah, that was 12 years ago. I don't care. I got to deal with reality because my job is to help you try to make money, not pontificate and decide that you can't or shouldn't. The bottom line, if you want to make money in the market, you have to recognize that mega cap stocks are their own animals and don't have to be linked to the federal funds rate. If you want to ignore them and focus solely on some index funds that marches to the tune of the Fed, be my guest. But I sure wouldn't recommend it. You can do both. That's right. It's easier than walking and chewing gum at the same time. I want to go to Tom in Florida. Tom.
Thanks for taking my question.
Tom, my pleasure.
I'm wondering if MongoDB is a good AI play.
There are others that are much better. You know what? And I don't like to fool around on the AI plays. We got the best AI company in the world, which is Nvidia. And I know it's moved a lot, but you know what? It's the best. And I like to buy the best. How about we go to Mark in Missouri? Mark.
Hey, Jim, longtime club member, first-time caller.
Oh, I hope you like today's conference call, which is still available. It's available online. You can get that. I think it was a good call. How can I help?
My stock is Starbucks. I started a position in the low 90s. It's drifted to the low 80s. And my question is, do I buy more here or do I sit tight? Thanks.
I think you buy more. I think that what's happened here, frankly, is that it did get a little ahead of itself. The turn's taking a little bit longer. But you know what? It doesn't matter. We want to own this thing. It's like, remember when I sold Oracle because I got impatient? I never are going to forget that, ever. And I think those who are impatient at Starbucks are making a very big mistake. My faith is in with Brian Nickel. I'd like to go to Kathy in Ohio. Kathy.
Hey, Jim, admire your show, insights, and work ethic. Got a question
Fantastic.
for you on Kroger's. Kroger's 52-week low, $54, 52-week high, $74. It's at $65.99 right now. I've made some money in 2 years, about 43%, 5 years, 98%.
Wow.
My question to you, should I be buying some more? I like
Kroger right here. I like Kroger. I think the numbers have been better than expected. Traditionally, I can't believe it has drifted down here. People worry about food inflation. I totally get that. They'd rather own Walmart. I totally get that. I like Kroger. I do like Costco even more, but Kroger's less expensive. How about we go to Mark in California? Mark.
Jim.
Mark.
How you doing, man?
I'm doing well. How about you?
I'm doing great, man. Thank you. Booyah.
Booyah.
Hey, so I was
Yeah.
just wondering, what are your thoughts on SoundHound AI?
SoundHound, it's a meme stock. You know, I don't. I just am not into the meme. I mean, I'm willing to talk about the meme stocks forever, research the meme stocks forever, but own the meme stocks forever? No. Anyway, look, if you want to ignore the mega cap tech stocks and just focus on index funds, be my guest. They're hostage to the Fed. I like to be hostage to great business people who make me a lot of money. I think there's much more money to be made that way. On Mad Money tonight, well, from flying cars to quantum computing, speculative stocks are all roaring. But how much speculation is too much? I'm going to surprise you tonight. Then you stump me on a quest of therapeutics. Is the small cap with big ambitions just what the doctor ordered? I'll give you my take. And forget your average cup of joe. Wall Street's buzzing about BlackRock Coffee's recent IPO. And I'm pouring over all the action. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.